All right, today we're pulling back the curtain on a really interesting investment opportunity in the crypto space. We're looking at a 500 megawatt Bitcoin mining development, and we're going to get right into what makes something like this so compelling. It really starts with its single biggest advantage.
And there it is. Everything, and I mean everything, hangs on this one single idea. The entire operation is built on something that is basically the holy grail for Bitcoin miners, a dirt-cheap, super long-term energy contract. This is the foundation for absolutely everything else we're about to talk about.
Take a look at this number, 2 cents per kilowatt hour. And just to give you some perspective, most big mining operations are thrilled if they can get power for 5, 6, even 7 cents. So at 2 cents, your biggest expense is so incredibly low, it creates this huge cushion against any swings in Bitcoin's price. It's a massive, massive advantage. And you know, this isn't just some temporary discount. We're talking about a 25-year fixed-rate agreement for a quarter of a century. In an industry where energy prices can go absolutely wild, locking in a rate like this is almost unheard of. It basically builds a fortress around the business that's almost impossible for competitors to get through. Okay, so you've got this incredible energy advantage as the engine. The next question is, how is the investment actually put together for someone like you? Well, it's built around a pretty clever dual return model, which is designed to give you both steady income and a shot at that huge upside. Let's break down how that actually works. On one hand, you've got a simple 12% fixed annual return on your money, paid out every quarter, kind of like a high-yield bond. But here's the kicker. You also get a 20% cut of the net profits from the whole mining operation. So you get the stability of fixed income, but you also get the high-growth potential of an owner. And this is where you can really see the power of that structure. Let's just say, hypothetically, for a $5 million investment, the fixed interest alone is pretty great, but that bonus return, which is tied directly to how profitable it is to mine Bitcoin with that super cheap power, well, that's what could potentially send the total ROI into the stratosphere. We're talking a projected 500%.
Of course, anytime you see numbers like that, the first question you should be asking is, okay, what's the risk, right? So let's dig into the foundation of the deal and look at how the investment is actually secured.
So your principal is protected because this is set up as secured debt. And what that means basically is that investors are first in line to get paid back. And that claim is backed by all the core assets. We're talking the land, the infrastructure, all the computers that actually do the mining. And yes, even that incredibly valuable 25-year power contract itself is part of the collateral. At the end of the day, the security here is tied to real-world physical stuff. But the absolute crown jewel of that whole package is the power agreement. That's the one asset that gives this entire project its long-term, unbeatable edge in the market. So when you boil it all down, here's what you've got. A really strong proposition. It's a 12% fixed annual return that's backed by hard assets, plus the huge potential upside that comes from a world-class Bitcoin mining operation. It's a structure that really tries to blend the safety of debt with the incredible returns of equity, all built on a foundation of some of the cheapest power on the planet.